Greaves Consumer or Havells, which is a better pick. But let's start with the first stock, and that is Jubilant Foodworks. It's pretty much been the stock of the series. It's gone up significantly. Even today has managed to recover from the lows of the day, but slightly now given off most of the gains. It's trading near its fresh lifetime high. Will the rally continue? And the lifetime high was seen after the Q3 numbers that came out. Then it cooled off. Now again inching towards the lifetime high. So what we're asking is, will the rally continue in Jubilant Foodworks? Is it a good opportunity? What do you think, Samir? Jubilant Foodworks?
Yes, the rally will continue because see, in Q3 and Q2 what trend came out is they have reduced substantially the Domino's opening and substantially increased the Dunkin' Donuts closures. So these two were heavy cash flow utilizations for this company for past 2-3 years, which was subsiding the return ratios. When they've taken this decision, all of a sudden you have seen the increase in the return ratios and the cash flow generation. Second of all, the SSG has come out in double digits, which is really good for them. And if they continue this kind of trend in Q4 results also, which I think they will, the rally will continue. I don't see that negative coming in.
Okay, so Samir believes that the rally will continue. Sharmila, do you believe this rally will continue?
No, I don't think so. I think we're done for it for now. I completely agree. Yes, all the parameters were positive, the kind of Q3 numbers that we saw. But I think now all the positives are in the price. And I mean, let's face the fact that yes, it was a great thing that they listen to the market and they have some products, you know, which you have that 99 rupees offering, etc. So, you know, these were demands from the market for the longest time that pricing, etc. was suffering. But that said, I think that, I mean, there is only so much valuation you can give a business which is serving, unless we think that, you know, markets are so bad that we'll be happier doing that. But I think as far as the rally goes, for now we're done with it. Okay, we are done with the rally. And what about you? Do you believe that the rally will continue?
So I'm neutral to the stock. It's a great business. It's a negative working capital cycle business. Jubilant also benefit from the fact that there are very limited companies in this space listed, so it also gets its scarcity premium. But having said that, I agree with Sharmila that, you know, valuations are extremely demanding. It's trading at about 70-80 times. You also have some headwinds coming in the form of Swiggy and the other online ordering apps. You know, so I remain neutral to this stock. So necessarily not all good businesses are good investments also. You know, there's a perfect example of this.
Okay, so I think two of our guests believe that it's not the right time, the rally won't continue. Samir believes that the rally will continue. So we'll ask Samir first. Samir, what about, I think the SSSG growth came in because it was on a demonetization base. The base obviously on the fourth quarter will also be low. So obviously fourth quarter numbers may also look elevated. But then again, the base effect will kick in. So that probably won't continue for a while. And valuations, obviously, that's an important thing for Jubilant Foodworks.
See, if you see in last 2 years, the store addition which they have done around 80 to 100 stores annually, that have been on the addition of at a very low base of SSG. And those stores will now come into the SSG. So there are two impacts. One is the base effect, which will finish in Q4 or next Q1. The other is the new stores which were added 2 years back. So the SSG counts 2-year-old stores. So that will get accounted in that system. So that is another volume growth which will kick in and keep, I think, the SSG around 10 to 12% for next 2 to 3 quarters. And if there's an actual movement after that, that'll get supported. I'm more interested in the cash flow generation. So that has eased off really well. And that will keep the valuations high. Because even in this kind of a carnage which is going in the markets and there's kind of a selling, it's hitting a 52-week high on the support of investors. It's not something which is driven irrationally or something like that.
Okay. So Sharmila, this last time I think they came out with this everyday offer. The counter really managed. They came out with some good numbers. Now this everyday offer they started 2 days ago. Don't you think that will have an effect on and obviously it's a growth story, so valuations will tend to be expensive?
Yeah, so you know, just to sort of go back a little bit, You know, there was a time when you were doing very good SSG numbers, and you know, the market was pretty excited about the kind of free cash that the stock was generating, and there was always a story that, you know, this is the kind of cash it's going to generate. But then I think what happens is for such companies is that where do you invest that money? So they had started Dunkin' Donuts, which did not do well for them, which they've now closed. So great, so far so good. But once again, you know, you are going to go back to that you've seen a pickup in SSG. As you're saying, maybe after Q4 that story may not continue, and you will have free cash. So again, you'll be looking for sort of new businesses. So we'll sort of be back where we started.
Okay. So
yes, definitely, you know, the stock had corrected too much, and these numbers were positive. So you saw that buying coming back in. All I'm saying is it's a great stock. Valuations are there, but now that it's done this high, let's just wait and see how it plays out 1 or 2 quarters before we really take it to another high, or you know, anything like that. I think just let's wait on this a bit now.
And Sangeet, the same question, because people are ready to give high valuations to high growth stock, and this is definitely showing growth. The numbers are showing. That's what I wanted to ask. Doesn't it deserve a high valuation? And FMCG as a pack is high valued. It's not that this is some outcast in the pack.
So it deserves a high valuation, but ultimately you have to see what kind of valuation ultimately you should give this company. I would not give this company more than a 35 or a 40 times valuation. That itself is
on which year earnings?
On FY18.
Okay.
You know, so as per that, the fair value would come to close to about 1500 or so. You know, you also have to take into account that there is a scarcity premium when you value this stock, because I would not qualify this stock as an FMCG. This is more in the QSR, in the dine out space, where you have very limited options available. You just have a specialty restaurant, or you'll have a Westlife, which is running into its own set of problems. But still, my only concern remains on the valuation. Business-wise, it's great.
Okay, so I think that's the view. I think we got a view in which Samir gave his point of view, where he believes that the counter is likely to rally up further. But Sharmila and Sangeet don't agree. I think prime issue is valuation on Jubilant Foodworks at this point of time. The next stock that we want to talk about is ONGC. Yesterday was rather active in trade. Let's see what it's doing today. Change, but it's down almost 15% from the recent highs. Now with crude moving up, with the HPCL integration and the gas price hike that could probably come in into the over the next few months, is it a stock that someone should accumulate at this point of time? Sangeet, should someone accumulate ONGC?
No, I am negative on this stock.
Okay.
Now, I find ONGC as a perfect example where the promoter's interest is not in alignment with the other minority shareholders' interest. Now, look at what government did in the month of January. It bought HPCL stake. It forced ONGC to buy HPCL stake at 474 rupees market price. The current market price of HPCL is 340. It drained out about 35,000 crores cash from ONGC's balance sheet. And this was done only with a view to fund it to justify the disinvestment target that the government had set for itself. You know, so I don't find any merger synergies as such between ONGCs and HPCL, because both are in different businesses. Also, I remain a little cautious on the oil price on a structural story, because of you have alternate fuels which are coming in, you have the electric vehicles, and so I remain bearish on the stock.
Okay, so the rally won't continue. Sangeet won't be buying ONGC even on a 15% drop. Sharmila, what about you? Will the stock rebound, or will it go down further?
I think it's likely to remain range bound. So maybe it can go up 5-10% from here, simply because it's corrected and crude is going up. But my view on crude is, you know, to just take off from what Sangeet said, I think that I think crude is likely to stay range bound for a variety of reasons. So whether it is supply side, or whether it is alternate fuels, etc. So if you have crude trading in this band, then it doesn't really make it's not very exciting to buy a stock which is in the exploration space. And again, I think their numbers, etc., were pretty sluggish. So I'm not even looking at that ONGC HPCL thing, though I completely agree. But I just think that looking at crude prices, I would think that this stock is going to stay range bound.
Okay, range bound trade. And what about you? Will it rebound?
I think so, yes, because we are positive on ONGC, because we are positive on crude going up in the second half. Because see, even if you see right now, the New York and the gas prices in New York have almost done a 30% up within 2 weeks, because of the winter still being persistent over there. And Europe, again, the crude prices are up by the Saudi supplies. So I think the crude prices will go up on 2 conditions. One is the OPEC cut compliance will be higher in March, and the drawdowns will be much more larger in US as people are expecting out it to be, because the weather is consistently more on the winter side.
Okay.
Even still. So I think ONGC will be a better off pullback.
Okay.
Which will come.
So I think two of our guests do believe that it's not possible for ONGC to do a big rebound, but Samir again does believe that there's high possibility. So we'll throw it up for discussion. Samir, I'll come to you first. Some of the concerns that Sangeet raised were valid, because the stake that it bought into from HPCL, the prices have come off, integration's not happening, and cash has gone off the book. So how does it benefit?
See, if you see, it's not something like a ex-insurance business buying into a government business supporting that. It's actually a business buying the other business. One is the supplier and one is the user of that. If tomorrow they come out with a supply agreement where the HPCL and ONGC both benefit, then the whole pessimism around the agreement and the MRPL merger with HPCL is still in play. So, and the funding acquisition can happen through OPAL. So they are planning to sell the stake in OPAL, which is costing around 24,000 crores to them. So that can fund out. It's very easy for them to fund it out. The only plus point which I see out of this whole thing, they have a downstream and upstream in one company now. It will be EPS accretive in the first quarter itself from my calculations. So this will take few quarters to take out the pessimism, but it will eventually.
But you see the integration as being beneficial.
Yes, see, the only point is, it's again, I'm not saying it's not something which is non-business taking over a business. It's business eventually taking a stake in another business, and that's also majority. Try to understand, if the government wanted to do that, they could have done it with 40% or 45%. Why did they go with 51? Is because they want to see in future making a oil major like any other company abroad rather than India has. So now if it's making one, I don't see any pessimism around that.
Okay.
So I think funding is a little issue which will get sorted out by selling that.
Okay. You want to add something?
I'm just saying that, you know, when you talk of actually getting two such giants together, I think it's easier said than done, because, you know, there are so many synergies that have to be worked out, because you're talking of huge workforces on both sides, and both are PSUs. They are not like private companies where you can actually, I think even for private companies this kind of rollout becomes tough. And here you're talking of you know, two really large companies within that space. So I think that it will take some time, and it will take some doing, and it will take a major force of will, which I really don't see in either of the managements, very honestly, so far. And I agree. I mean, you know, at the end of the day, I'm going to be a minority shareholder, and this has not really been done in the best possible manner.
Just to add, when you also have to take into account that HPCL remains to be a listed company. So now when you value ONGC, you would actually factor in a holding company discount.
Okay.
You know, so 474 was the price which the government, which ONGC paid. Right now the price is 340, and factor in an additional holding company discount to that.
Okay.
You know, so but then imagine the kind of the value erosion which has taken place.
But then you're accumulating today's price, right? Now you're saying that HPCL won't go out of 474 ever. Now, if it goes 1,000 rupees tomorrow, just because of the business and the plus points everyone's.
Yeah, but I would value today's
because see,
market
that's
price,
what I'm saying. So you're valuing it today. Any which way ONGC didn't run up, it's not going in the opposite direction. So the valuation is not stretching out. It's going in the same direction. And my only point is, if people are negative on crude, that helps the HPCL part, which eventually helps the valuation of ONGC as well on the whole.
For me, today's price is God, so I would value any company based on today's price.
I think so I think this is good. We got a complete 360-degree view on ONGC, but time will only say that who's right, or whether it was Sangeet or whether it was Samir. So we'll take this again one day again to discuss ONGC.
When either crude goes to ONGC goes to 130, or if ONGC goes to 240, then we will reconvene.
We'll do that. But we'll move on to the next stock, and that is Hindustan Construction. Has managed to rebound today. Yesterday was down 15% on concerns that they are going bankrupt on Lavasa. Obviously, the project hasn't taken off because of environmental clearance. But what we are asking is there any value left in HCC at this point of time? Sharmila, is there any value left?
So, I mean, it's really strange because, you know, just a month ago, you were talking of HCC as one of those plays which you could buy for an infra turnaround. And because of this Lavasa news, suddenly you think, oh, is there anything left in this? So, I think that, yes, let the discounting of this Lavasa issue happen. In any case, the management has said that they're working with bankers and financial institutions to solve that issue. So, let that happen. And then I think, yes, because, you know, HCC is in any case a company that sort of pulled itself out of CDR and it's gotten to where it is, it's working on debt actively, etc. So I think that, you know, once this is behind them, then probably, you know, you can take it from there. So for now, I just really watch that space to see what really comes out of this Lavasa thing. But yes, I do think that, you know, given the kind of order book that they have and the other businesses that they're in, I wouldn't write it off in such a hurry.
Okay, what about you? Is there value left in HCC?
So I have a very limited understanding of this business, but what my prima facie understanding is, there are 26% of the order book is from Jammu Kashmir, and where they are facing execution challenges. Current debt, the current cash flows are not even sufficient to justify servicing of the debt. We have heard the story of the infra construction since last 10 years, but you have hardly seen any wealth creators emerging from this space. So the key to this space is the execution. You can have a lot of order book, you can have bulky order books, you have a lot of orders coming in, you can just bid aggressively and get the orders, but ultimately it's the execution which is going to matter. And if a company is having execution challenges, then I don't see a case for an investment in such companies.
Okay, Samir, you don't track it, but would you want to say anything on this?
I would like to lend it.
I'm sorry?
I'm happier as a banker to it rather than an equity investor.
Okay. Okay, so that's the view that's coming in on HCC. We'll open it. In terms of Sharmila, because the point is we see a lot of order inflows being announced every day, Dilip Buildcon or KNR gets, but it's been a while since, you know, HCC got any kind of order. So is that a concern that you would have, that, you know, it's not been able to bag orders also?
Well, I don't think it's got no orders. I think there are orders coming in, and I think that, yes, I take that point well, that execution is a key challenge for, I think, every company in the infra space. But at the end of it, you know, the kind of logjam that we find ourselves in, you know, with view to capex and, you know, things like that, I think that can only be solved if, you know, once you get power and infra really up and running in the country. So the last bull cycle, we all know what levels we paid to buy a BHEL or whatever, and, you know, what valuations they are available at today. So if that's the case, you know, with stocks like a BHEL, then, you know, I think that it's only right that HCC should suffer the way it has. I mean, you know, on that scale of comparison. So all I'm saying is that there is value. I'm not saying that whether it will go lower than this, but I'm just saying don't write it off in a hurry, because it's not like they're not the best. Obviously, it's not like they've got the best orders or they have the best execution or anything like that. But I think that they are getting their orders, and, you know, they are, after all, operating in a very niche area. They are taking orders which others don't take. You know, that has typically been their, like, strong point, that they take orders and they do projects which are challenging, and that has been their USP for the longest time. So I think you have to give it to them for that. Okay, and
Samir, do you think that this infra turnaround story is really there? Because we've seen some HNIs buy into JP Associates, there has been accumulation into Suzlon. So is this ever going to turn around, or I'm just a general view on the infra space, or these, as he said, that they're never wealth creators. In fact, most of them are wealth destructors. So will wealth ever be created now?
See, what happens when the optimism comes, they really fly. As in, see, you start winning orders just because of the heck of it, and people start. As she said, there are certain companies which pick up order which really are not picked up by anyone. In that, the risk is mainly in infra is you take a lot of debt to complete orders, because your payments are like 60 days, 90 days, 120 days. So when the slowdown hits, your debt repayment takes a very big hit, and you're not able to come out with it. So whatever has happened in the last 10 years will remain that kind of same. So whoever has been able to come out with that debt, see, I eventually, if you see infra space, I've always studied, and whatever my experience is, nothing beats a L&T. The biggest mistake from my side, what they did is they went to Middle East. Now, if they are rectifying it in certain way, I think I'll still bet at L&T out of this whole space.
Okay, so L&T, you'd rather bet on a notable name rather than...
Yeah, because see, the only point is when you talk about wealth creation, the downside becomes very big factor. And if it can sustain that downside, then automatically the upside to capture is very much easier.
Okay. Sangeet, on your view on the infra space, you don't like HCC, but is there something that you like, or you're negative on the whole space as such?
A couple of niche names actually. One is a very small company based out of East, GPT Infra Projects.
Okay.
That is something which I like. There is one company based out of South with Hindustan Construction. Those are a couple of names which can which
so it's a
investors can
selective piece that you're doing on the infra space, not bullish. Okay, so that's the view that we are getting in. Sharmila is rather bullish on HCC at this point of time, but the other two guests are not too keen on the HCC at this point of time. Sangeet, Samir said that L&T would be his preferred choice, and Sangeet is talking about GPT Infra as well as Hindustan Construction as niche plays. And the final stock, and in fact it's a selection that we are asking. What we are asking, most of the counters in the consumer durable space, there seems to be significant amount of interest. So among Crompton Greaves, Consumer or Havells, if given a choice, which one is a better bet? Obviously they can say both, there's no issue, but which is a better bet is something that we're asking. Sangeet, you go first. Out of the two, which is a better bet for you?
So out of the two, I would prefer Crompton Consumer over Havells. But if you ask me my picking order, I prefer a third company called as V-Guard.
Okay.
From the other two. Now if you talk specifically on Crompton Consumer, that they are more focused towards three business lines. They just have three products. One is the fans, the second is the residential pumps, and third is the LED lighting. Whereas Havells is into host of the products. They are into white goods, electrical products. Recently they have bought ACs also. Crompton Consumer, both are trading at more or less similar valuations.
Yes.
Valuations are expensive for both the counters, so at present I would not recommend any buying into this stock. But given an option, because of Crompton also has an advantage of a higher ROE because it's an asset-light business what they follow. Also they are promoted by the private equity players, so in terms of management and all, very, very comfortable. I prefer Crompton over Havells, but at the current price I don't prefer either.
Okay, what about you, Sharmila? Which is the better pick and why?
As he said, I don't think there's really much to choose, but I think just in terms of valuations at least, both seem to be sort of expensive in that sense. But I think just looking from a longer term perspective and because of the kind of product line, etc. that they have, I think I prefer a Havells.
Havells. Okay, because of the product line.
Yeah, and the kind of synergies, what they've done over the years, the kind of products that they've introduced. I think that has a better outlook for me going ahead.
Okay, and what about you? What's your pick?
I'll pick Havells.
Why?
Given two reasons. One's the recent acquisition of Lloyd's, which gives them new categories without spending on the distribution additionally. Second, they are less on the debt, and so cash flows are generating at a much faster pace than Crompton. Crompton, they are into three categories, but they are focusing now in introducing more categories. Now in that, you have to spend a lot of money on the distribution and reduce your margins. So I think over there, the cash flow generation will be much slower than Havells.
Okay. So Havells is something that two of our guests pick, and Sangeet is bringing Crompton. Is that a valid concern? Because you're saying they have three lines, and now if they're looking to expand, there again, margins would take a hit. They'll have to spend significant on acquisition, and they will have to develop new product lines.
It could be a valid concern. That's why I remain cautious at the current valuations per se.
Okay, but what makes you bullish on V-Guard? So let's talk about that. What makes you bullish on V-Guard?
So V-Guard has predominantly been a south-based player. Only the last couple of years they have expanded their geographies to rest of India also. Now, in terms of market opportunity, it's a huge opportunity. It's a very undertapped market. The product lines are again, you can say, a little similar to Havells, but they are more into stabilizers and other white good products and all. Management-wise, there is absolute zero debt, very, very known management, market cap of about 9,000 crores itself. So gives me a lot of comfort actually, but again trading at an expensive valuation.
What's the valuation like?
It's about 50-55 times.
So it's more expensive than
it's more expensive because they are a niche player.
Okay. Samir, do you think that the acquisition of Lloyd's has helped Havells in a way, and how will
I will give them 2 seasons to come out of that, because the only point is it's very summer based products. Now if they expand into washing machines and all other lines properly, I think that seasonality will go out of. My only plus point is Havells is domestically grown and has expanded from being a B2B to a B2C. So they've learned that process, and in that process they've not taken a lot of debt. So my only thing is, if they are able to repeat that way, I think there will be a big booster coming out, because then you're able to access both end of the market through one brand.
Okay. And Sharmila, any view on Crompton as such? You said that you like Havells, but what's your view on Crompton?
Yeah, that's precisely the thing. I think that their product lineup at this point in time is limited, and then precisely I think then there will come a time when you will want to expand that, which has been the way all these companies have gone. So I just feel that Havells has already sort of been there, done that, and they're ready to move on from there, while Crompton consumers just getting there and they're trying to expand their product line. So they'll have to go through that process. So I think given the fact that both are expensive and both are doing well in their chosen spaces, but just that they have a better lineup, Havells, I think, that's the better stock out of it.
Okay, and your view on Crompton as such?
See, Crompton, the only point which I see is, like in between, they tried to bid for one of the appliance companies, which they backed out at the end of it.
Yeah.
Right. So they are looking for that growth. Now, if it doesn't, because they already have a debt on the books, and if you take a aggressive acquisition, you'll not be able to supply the cash flow to it. And if you start to build on your own, right now it's a very competitive market, so it'll take a lot of distribution money, and the margins will be very thin initially for first 2 years. So I see a lot of stress on the books for that expansion issue, which I don't see on Havells.
Okay.
So that's why I see next 2 years much more easier for a Havells than a Crompton.
Okay, I think both of them work on similar margins, similar valuation, but the profit-wise, I think Havells is almost 2 or 3 times what it is, and revenue-wise, it is almost double.
So that's where the interest cost which they are paying, that comes out. Eventually, what happens, like if you've seen the product line, there are 3 products which are higher margin, because certain are B2B. They might see B2C, but eventually the fitment is B2B.
Okay.
So over there, they're able to maintain that margin. But when you come into exactly into consumer play, the products are lesser.
Okay.
And especially when you're entering new markets.
Okay.
Because you need to have that shelf space in the stores and everything. So it takes a lot of money to show that presence of within a store.
Okay, so that's the view that's we are getting in. Sharmila as well as Samir are bullish more on Havells. Sangeet is saying both are expensive. Given a choice, he would prefer Crompton, and if given a better choice, third choice, he would prefer V-Guard in this space. So with that, it's a wrap on today's Hot Money. Sangeet, Sharmila and Samir, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quiz.
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
सॉरी, आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख।